Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, November 22nd, 2016, and this is the Daily Report for Gold and Silver. We do have nominally modestly higher pricing in the precious metals markets, with gold futures currently trading up about $2.60. That is a 0.2% gain, and it is currently closed at $12.50. The low today has been $12.05 and change, and the high $12.20. When we look at COMEX Silver also trading higher on the day, up about 12 cents, a net gain of almost 0.75% at 16.64 with a low of 52 and a high of 88. Now, when we look at spot prices, realize that the actual net result is about the same. Spot is also trading at $12.60 currently, but it's down $1.40. As you can see, what we are witnessing right now is spot and futures really coming into alignment, with spot being down, futures being up, but the net price being the same. With silver, we're looking at a smaller gain, but net change is different, but price is the same, 16.65. Now, the dollar, which had just been on a tear, on a rampage, we have seen the first signs of potential weakening. In essence, we're trading unchanged to up a couple of ticks to down a couple of ticks, but we are back above 101, currently trading at 101.05. Let's take a look at our first chart. So traders, as we pull up our first charts for today's show, I want to look at the Dow Jones Industrial Average. Not so much because it went to a new record all-time high, which it did. Not so much because it's well over 19,000, which it is. But because we have this short-term optimism, this effect that we have seen since Trump became elected and is now our president-elect, and that optimism is probably going to be prevalent in the market until at least he actually takes office, we could see further advances in the U.S. equities markets. Now, I bring that up simply because in the light of U.S. equities running so strong to the upside, of course, initially and throughout, of course, last week, we saw tremendous pressure in the precious metals markets. This, of course, is the 8th day of November. This is the election day. That huge, tremendous spike that we saw just as results were coming in, and it was clear that it wasn't a clear-cut victory for Hillary Clinton. The market began to really move up. Equities, on the other hand, moved substantially lower. Dow Jones futures down about 800 points at its worst. And then the unthinkable happened. The market really turned on a dime, did a 180, and then over the next couple of days sold off from this intraday high above 1330 to just about 1200, just above 1200, with these lows at about 1209, 1205 in that area coming down. Now, with that in mind, I really think that we have seen gold as well as silver to some degree, but specifically gold, hold its own in light of the kind of substantial pressure we have seen given an incredibly strong U.S. dollar and in incredibly strong equities markets. And as you know, the question that we are attempting to ascertain or answer is, at what point will we find a price point for gold to find some support? Now, to that end, we have plotted over the last couple of weeks a couple of different fib retracement areas, and of relevance and importance right now is this one area right here, which is a 50% retracement, and it is a 50% retracement of the yearly low, which sits around 1050, up to the yearly high at about 1380, and then you've got a 50% retracement. Below that is a 61% retracement. That comes in anywhere between 1169 and 1174. Now, at least for right now, we are absolutely holding at this particular price point. We have not seen it dip tremendously, but at the same time, in terms of finding support and a key pivot point, we are certainly not out of the woods yet. There's no certainty that this is where it's going to be. We do have some technical historical data that backs up our assumption that this would be a logical point to look for some sort of support in the market. But however, as you know, my sense is that the 61% retracement level is a much more likely point just in terms of the pulls of gravity, so to speak. In other words, all these underlying market forces that are really moving against safe haven investments as we move in and continue to be in this risk-on environment. Which really takes me back to our longer-term studies, and there's two of them that we have been working with. This chart here, it's a weekly chart, but we're really looking at an Elliott wave count and also Fibonacci retracement support and resistance points, and the weekly chart that really focuses in on how gold prices, tend to react at the end of a calendar year, beginning of a calendar year. And what we have noticed and what we have pointed out is that in many occasions, especially since 2014, if you look at this 2013, anytime you bought it was a hot knife through butter and you got hurt. There's no doubt. 2013 starts right here, and it had already been in a pretty steep decline and just continued throughout the year, really not even culminating in any kind of a low until about July, having one little clip up and then moving back to have this double low here. And so 2014, tremendous rally just following that. 2016, tremendous rally just following that. 2015, again, a tremendous rally just following the conclusion of the calendar year beginning of next. Now, with that in mind, we could easily, if that type of historical trend continues, continue to see some weakness as we go in through the end of this year. And from the end of this year, we could look for some sort of a bottom action to come in, whether we find support at this particular area. Here's our 50% retracement at 1209, or if it digs a little bit deeper down to about 1170, which would be our 61% retracement. My sense is that these are two distinct areas where we should find a bottom at one or the other. I don't believe we're going to see prices go much below 1170 if they even touch that and flirt with that particular price point. So the real question is, will we see the remainder of this year sluggish with pressure put on gold prices, keeping them in this particular price point or possibly even a little bit lower, moving to this 61% retracement? Well, if history repeats itself on a seasonal basis, we certainly could. However, we've got a tremendous caveat, and the caveat is a trump card. And that is that we have so much uncertainty as to how our government is going to run come January 20th that there is a lot of open air for different types of scenarios to play out. In other words, we just don't know. But as I said, if history repeats itself, we could see this market to continue to fall under pressure, finding a bottom somewhere towards the end of this year, beginning of next. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.